Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody's doing well. Had a heck of a day, heck of a week, right? Big swings in, as you know, unless you've been living under a rock, have big swings in the market this week. So one of the themes I talk about quite a bit, and I'm going to kind of recap this because essentially we started the week with a massive rally. As you guys know, we were in here on Tuesday and essentially gave it all back today with the hot or lower than expected, I guess not lower than expected, but the number actually came in a little bit lower, but it's still a hot, jobs number. The unemployment rate didn't tick up and so forth. So this whole theme of buying low and selling high. So if you were long this early in the week, and I always tell people, if and I wrote about this over the weekend on the newsletter, is if you're going to short the market, short the rallies, which in fact, here at TTS, we just covered our puts right on the close here. And so just to kind of reiterate this, this whole theme of not chasing the market down, even if you're, clearly the market still has all kinds of issues with inflation, rising interest rates, and so on and so forth. So in any event, just a quick lesson. Again, everybody, give me the thumbs up, put some commentary in, join the channel. Also, the newsletter link down below. Timely also is I have a class coming out a week from tomorrow, actually next Thursday, the 14th, I believe it is. It's the 13th, having to deal with hedging and volatility. So it's an options class. If you are interested in attending, again, the link below, you can register. It's absolutely free. Yep. We did pretty good, Gallo. I don't know if can't remember when the last time you were in with us. We actually just closed out our puts. We had another strangle in the S&P. We closed out the puts essentially right on the close. We closed out TSM and XLE for the week, right? So XLE did great, as you know. I don't know if you were in that one. And we did take a stab at the Russell this morning. It right around, I think I mentioned to you guys, we did take a stab on the Russell at right around 1720. It rallied about 15 points and then came back, right? So we did take a stab on that earlier today. Yep. Gallo, always in retrospect, my friend. Is it okay to leave money on the table? Right? Yeah. I mean, wouldn't you rather leave money on the table always? So yeah, I mean, in retrospect, again, we don't play that game around here, right? The old coulda, woulda, shoulda. And by the way, along the same lines, Gallo, if anybody told you that they knew what was going to happen today, right? So, you got your plan and you execute it, and that's what it is, right? So, all right, let's move on, everybody. Pull up your charts. And again, all we really did, I mean, if you look at the S&P, let's just review very quickly. Again, we had that massive rally coming from the, remember I mentioned the 1370, actually I did mention that to my members on Sunday, and I kind of mentioned that in the newsletter, the 3570, 35, 3040 area in the S&P, kind of so we had that, as you guys know, we had that huge rally, ended up close to the distribution around 3850 that I talked about, kind of meandered there for the last couple of days, and obviously today got hit again. We are still having, we still did not take those lows out on the close today. Next week, by the way, is going to be really interesting because what do we got next week? We've got Fed minutes on Wednesday. We got bank earnings, and the big one next week is going to be CPI. So we got CPI on Thursday. So we've got all kinds of market moving data next week. So expect more volatility next week, and we'll see what happens. One of the things that was interesting today, still watching for kind of a capitulation type of thing, is the VIX. That was, again, I don't know what it's going to take, I have to tell you. But the VIX, if you look at the VIX, it just closed at 31.31, even as the selling intensified. I was hoping we'd get a spike. I think what's going to need to happen, as I keep talking about this, I think what's going to need to happen is we're going to have to break another new low like we did last Friday, and then finally, I think we're going to need like 1,000 point down day, like 1,000 Dow point down day, that kind of thing in the Dow, or like 150, 200 point down day in the S&P, and then the VIX jumping into the 40s. That would probably be the culminating low. We still don't have that. And so could we still get some more of these huge, reflex rallies? Absolutely. Right. So we did close out the puts, but we're going to put on a new set going into next week's CPI number. So that's kind of, I've been playing. So we've actually done over the last 3 weeks, just playing the SPY strangles. On balance, we've done actually really well. We didn't really, last week, because the market didn't move it much. We actually took a loss on that, but adding this gain today and the gain from the prior week, on balance, we're almost up. We're up very, very nicely doing those weekly. So if you're interested in something like that, how we do that, again, join me for 5 days. I actually did one live yesterday with a group. We did it actually live in the group if you're interested in what I'm doing. And I'll go through that a little bit in the class on Thursday. So if you're interested, I'll kind of give you kind of a teaser on that, because obviously, the paying members are the ones that are going to get the full attention. Okay. All right. So let's move forward. Where do we have now? We still have going forward. I'm just going to recap real fast here. We still have the 3750. 3570, 3539. Look at your charts on that. It's a drop based rally. And then below that, if we take out 3,500, then Katie bar the door. I think that may be that we get a really acceleration down as well on that. So that's going to be interesting next week with the CPI coming out. If it's still hot like this jobs number, this is what's going to keep this market on its heels and rates higher. So I keep saying very simply, as long as rates stay up and the dollar stays up, market cannot have any kind of sustainable rally. Bottom line. So, the buyers are going to be guilty until proven innocent, or vice versa. Sellers are going to be innocent until proven guilty, kind of thing. Okay. All right. Nasdaq. Interestingly, the Nasdaq also got hit pretty bad today, as we know, but very similarly did not break Friday's low. So you can make a case that the rally from Friday's low in the Nasdaq could actually be a new accumulation, right around 11,000 on the Nasdaq. So we'll see what happens there. Close at 1190 and a quarter as we speak. So we'll see what that. And then again below that, we did actually hit a nice level on the Nasdaq. 11,712.75 in retrospect. Obviously, that could have got blown out today if we had a favorable jobs number. But in retrospect, I mean, that obviously is the one that worked for a few hundred points. So we'll see what happens next week. There's a new level that was formed also as we came down that may be interesting to some of you. This 11, right around the 11,500 level. Check it out on a 4 or 5 hour. That could be something. And then below that, really, we're looking at about in the 10,700 area on that. Okay. We did have Apple puts. I think I mentioned that as well. Those went out because of because we were just using that as a hedge. Looked like they were going to come in. They were 139 puts. As you know, I think the low on Apple today was 139.50. So I'm going to be looking at Apple. That's the other thing. Watch Apple if it's actually still holding. As you know, the low was like 129 on the June lows, and Apple couldn't break 139 in the last week. So it's going to be interesting to see if they finally break down Apple, taking that general down and going back down to the 129 area. If that's the case, then the Nasdaq is going to be down another 300-400 points. Okay, so that's another kind of little tidbit for everybody. And then the Russell held as well. The Russell held right at the 1700 mark, but there's nothing until you get down to that 660 area. It's held there a couple of times. I think we're probably going to revisit that and perhaps even break it. But still, if you're looking at your Russell chart, I would tell you, look at the relative strength of the Russell. Still, even in the midst of all this selling and bear market and all that, even now relative to the lows, look at where the Russell is. So I'm still looking. I'm going to after today, we're going to reset everything. I'm going to do some work over the weekend with my members, and we're going to reset everything and look to see. There's actually a nice level I'm looking at in the Russell, a little bit below this as well. But you can see on the charts, if you're pulling up your Russell chart, you can see the relative strength. Just looking at the lows. Look at how far away from Friday's lows, and June lows were still hanging out. So, okay. All right. Now let's get into, bonds. That's the near the drop-based rally at 106.25 if you're looking at your 5-year chart. So as long as they don't break down, that's going to help the market. So that's going to be the critical component next week. If we break down, and obviously everybody will say, well, looks like it's going to break down, but you never know, right? So we had that huge pop in the 5-year that I've been talking about, and the 10-year and the 2-year. And the key also, if you look at the 2-year, that's also ready to break. If it does break, that's going to be the killer for stocks again. Right. So that you can see that thing also came up close to the 103.5 level, 103.5, 103.8. If you're looking at your, again, 8-hour chart on the 2-year, I think I've been talking to you guys about looking at that 2-year, came close to that, fell off. And now we're right on the cusp of breaking another new low, which would put it down to around like 2005, 2006 area as well on that. So watch that very carefully, because I think that's going to be the key. Let's move on to the dollar. And as you might suspect, the dollar did rally. But surprisingly, the dollar, came right. If you look at your chart, 110. Remember, we've been talking about that level. That was the key level. If it's going to hold, it sure enough came right to 110.13, 109.32. Which is the level I gave you guys the other day, hung in there, and now it's right back up again. And so now let's see if we attempt another shot at the high of that dollar index, DXY. It's still about halfway to that level, right? So we bottomed at 110.13. We're closing right around 112.77. The high is 114.72. So it's right around that midpoint. Yeah, how you doing, JT? So all of that put together, basically just a lot of the same old, right? A lot of the big back and forth swings. And I don't, I don't think that's going to change, especially, with bank earnings next week, the Fed minutes, and the big one again, the CPI as well. You again, that CPI better not come in hot again, because if the CPI comes in hot, this thing's going to, again, we're probably going to go down to 3,300 on the S&P, most likely. Okay. So, but that's not till, again, that's not till next Thursday, and there's a lot of trading in between, as you know, right? Like this week, we didn't have the jump. I talked about the non-farm payrolls, but look at these big swings we had early in the week, and now giving it all back. So I suspect we're going to have a lot of that. And just to reiterate, like I've been tweeting and all that, are we going to get another big rally? We'll see, but selling the lows has not been the best situation. If you sold the lows on Friday, you saw what happened Monday and Tuesday. So selling the rallies is what's up, right, everybody? Selling the rallies is really how you got it. But again, psychologically, that's really tough to do. In any event, okay, let's move on. You guys have any questions, comments so far? Yeah, did you? Oh, you mean on the right on? Yeah, our we have a little room where we do some momentum trading. Yeah, JT. Yeah, so you didn't come in early. We sold our puts, our S&P puts on the close today. So we came in with some S&P puts, which we did okay with. Yep. All right, good for you. Good, JT. All right, let's move on. Really not a lot to talk about in the currency markets. I really, I've been talking about, like, if you look at the only two currencies are, the only two currencies I would even focus on right now that maybe is one of the things I noted with my members is remember I talked about the 114 level on the British pound. One of you guys here, whether that low that may have been like the capitulatory low in the British pound will stay, and relative to the strong dollar, right? So gold held right at 1735. It has pulled back, very similar to the British pound. The pullback is somewhat shallow so far, sitting at 1700 from 1734. So, you would have thought with the strong dollar today, this thing would have cratered, but it didn't. So that's interesting. And then silver is still my favorite. We're looking at again a pullback area in silver. We did get up to 21 and change. That thing had a monster rally, as you guys know. The silver market had a monster rally this week from 1850 to like 21 in a straight shot, and then obviously now it's chopping around. So still looking at these two markets on pullbacks, silver and gold. Copper just chopping around, really not a lot to do in copper or platinum. And then oil was the big one. I mentioned the XLE and the 90 level I've been talking about. I've been writing about that with OPEC cutting production and so forth. That thing just, the XLE has been a place to hide in the market. Yeah, we did get out a little bit, as Gallup pointed out. We left a little money on the table on that. In fact, we left 2 points on the table on that, but it is what it is. And we did take a stab at a short on oil earlier in the week. We were up about almost 2x, and we got out break even on that trade. And good thing we did, because you see